Hello, everyone. This is Sergio Marrero, and tonight we have another special guest on Rebel One Live, Kat Hernandez, that is general partner of the Venture Collective. Thanks for joining us tonight, Kat.
Thank you for having me. Where are
Yeah,
you in the world, Sergio?
Chicago. How about you?
I'm in New York.
Excited.
Long New York, so I'm going to be here forever.
New York's great. You had the Exodus, but everybody's coming back because New York summers are the best. But to share a little bit with the audience about Kat, before we begin, she has accelerated many founders and been an investor. She's a graduate of University of Minnesota, and then also has her MBA from the College of St. Rose, and is working on building the Venture Collective, which she'll share more about. So to tip it over to you, can you share with the audience a little bit about what is the Venture Collective?
Yeah, so it's a few things. It's a bit more dynamic than I would say like other venture firms are because we have multiple pieces to our business. And so the first piece of the business is centered around community and this belief that I think early stage founders need a lot of capital in the early days. And some of that capital comes in the form of high net worth individuals and family offices. And so we, over the last year, have curated an investment community that functions similarly to an angel group in a lot of ways. But these are people that have aligned with us in mission and values and basically are looking to deploy capital alongside TVC, typically in the Series A plus rounds. The other side of our business is a venture as a service, like fund of one offering to family offices. And that is founded under the belief that trillions of dollars are going to transfer to younger generations over the next few decades. And those generations will likely have an openness to venture as an asset class because they have that risk appetite. And so we want to be part of offering them an ability to do that in a kind of methodical, regimented way that I think a lot of high net worth individuals and family offices just don't have the ability to do necessarily because it's not their core business. The last piece of our business is exactly what you would imagine. It's a early stage fund focused on pre-seed and seed stage companies with a high focus on backing underrepresented founders, because I believe that there is a lot of like space to innovate, but also a lot of opportunity to focus on those that are traditionally seen by the venture ecosystem. That was Great. A very long answer to your question.
So. No, that was great. I mean, there are multiple pieces to this. So can you share with the audience, some of the founders out there, when you say underrepresented founders, can you share a little bit more about size check you intend to invest in, or certain industries of focus beyond that?
Yeah, so as far as like size check, I think that depends on our entry point. So pre-seed and seed tend to have very large ranges in valuations and like round sizes these days. But on average, we're looking to deploy somewhere between like 100 and 600K, at least initially. And then a very large percentage of our strategy is centered around following on. And because we have a kind of hands-on ethos as a firm, the hope is that over the time that we're getting to know you, that also then will inform our investment strategy. And so the areas that we care about are world preservation, so anything around sustainability. We care about human empowerment, and that is very squarely defined for us as fintech, future of work, and ed tech. And then we care about life improvement, which for us is like really health and wellness. And so if you look at what ties all of those things together, like ultimately it comes down to like, how do we invest in businesses that are bettering the 99% of the world, right? And so there are a lot of great companies being built for the 1%. And I think like at the end of the day, I want to be the kind of investor that furthers those that have lower average household income and lower ability to access like high quality care and financial optionality. And so we're very excited to back founders who are building big, positively impactful businesses in those spaces.
Amazing. One of the unique things I saw about your model is that you are dual headquartered in New York and London. Can you share why did you choose to do that, and how does that work?
Well, so a couple of things. My partner Nick is British, so that ultimately made it so that London really made sense as like a secondary ecosystem for us, and we have a handful of advisors and early investors in TVC that are just bullish about the innovation coming out of Europe, and I think realistically, London has to be the hub for that. Though, like some would argue that, Berlin or other places are equally credible. And so we think that there is a lot of opportunity in that budding ecosystem, similar to what you saw in New York 10 years ago. Right. And so I think we want to have a home there. We believe that 80% of our investments will be in the US, but there's 20% of investments that we really think could be in like Europe and surrounding areas.
Great. Before we dive into a little bit more on the uniqueness of the model, the community-driven approach, I know that it seems to be a theme that's happening. Would love to learn a little bit more about Kat. What brought you from, getting your MBA? I know before you have a history working in consulting previously and talent acquisition, and then now on the investing side. Can you share more about your journey? How did you end up being an investor?
Kind of by accident. And I say this to people, and maybe I have to revise the story now that I've decided it's my life's calling. But I spent about a decade or so operating mostly in early stage companies. I was fortunate or unfortunate to be moving to New York City around the financial crisis. And so the traditional path of going into finance just like didn't seem that interesting. And so I ended up bouncing around at a handful of startups. I didn't really know what I wanted to be when I grew up, but I was really good at people stuff. And so I ended up like an early part of my career centered around, talent acquisition and people operations. And I think there's so many things about early stage investing that draws on those experiences, because at the end of the day, pre-seed and seed investing is like largely centered around people. And yes, you need to know which things could be massive opportunities, but you can get educated on that stuff, right? And so, I would say 6 years ago, I met my partners or former partners at Primary Ventures through someone I'd previously worked with and that they were very close to. And at the time, they were a $60 million first fund, building their brand from the ground up. And they had wanted someone with a little bit more recent operating experience to basically figure out, like, what does it actually mean to be a hands-on investor, both to be beneficial to the founders, but also to be beneficial for us, because we wanted to be, the kind of investors that used more information to make informed decisions. And you can really only do that if you're building deep relationships with your founders and you're really being supportive on the other side of the check, right? And so I helped build that firm. I certainly don't take all the credit for it. And now you see that firm has just announced a $200 million like fund 3 in 6 years of operation. And like, I think a lot of that is due to the fact that we stayed true to our identity early on. And we built our brand first and foremost off of our own like personal brands, which eventually evolved into Primary as you see it today. And I'm here because I want to continue on that path, but I want to focus more so on like a wider geographic territory, because Primary only invests in New York, but also a subsection of founders that I think constantly gets overlooked. And there are so many founders building great businesses that never see the light of day because they don't know the right people or they don't have access to the right resources.
Great. So, you talk about the venture collective. How long was it in the making? I know, you've been about a year public with it. Can you share a little bit more on what tipped that decision to say we're going to start our own VC fund?
So a few things. I met my partners in late 2019. And at the time, it was just like, you should get to know these people, great people. And I wasn't necessarily looking to leave my current firm at the time. And so I think the switch ultimately was this notion that if you're going to be in this business for a long time, then you may as well be building something that feels more like your own. And I think that there's no good time to leave a good thing. And so I decided basically in the heart of COVID to make a shift. And so for the better part of a year, my partners and I have been building our team, refining our strategy, deploying some capital initially to demonstrate that we could both access deals and support founders in the way that we said we were going to. And I think that part is really important because as an emerging manager, LPs look for that, right? And I think it's all fine and dandy to say that you can do it, but it's a very different story when you walk to the, I guess, like when you walk to the plate with 14 investments, one of which is already a unicorn in less than 12 months. And that will not be the same, cadence maybe that we make going forward, but we're super excited about the early traction. And so when we announced TVC formally in, I believe, June of last year through TechCrunch, it was several months into us refining our strategy. And I'd say like the last year has been a really good foundation for the business.
And that initial, can you share a little bit more? We have some aspiring fund managers listening. Can you share some of that? What is it? The hustle behind the curtain. How, like when you mentioned, hey, we got into 14 deals and got into a unicorn. How did you do that? Like, where did that capital come from? Was it like the capital of the group, or like how did you all make that first leap?
So I guess a few things. So we raised a little bit of capital into our GP just to get things going, put a little bit of our own money in. And then, as I mentioned to you, community is a big part of our strategy. And so that co-investment community, which we call the collective, basically allowed us to invest in slightly later stage deals and allow us the ability to write larger checks than we would normally be able to write at the stage that we were at. For the pre-seed side of the portfolio, though, we invested in 7 companies, like first institutional money in, high conviction around the founder and the opportunity. And, a lot of those companies have now raised, additional rounds of financing and will continue to do so this year. And so like how we do it is you just have to hustle, right? Like starting a fund from the ground up is not for everybody. And joining a fund similarly is also not for everybody. And so I think just when you think about your path to becoming an investor, it's about understanding whether or not you're willing to kind of go down the path of both simultaneously raising capital for yourself, but also then deploying that capital well on behalf of other people. And if you're an emerging manager, it's doubly difficult because you're basically having to prove yourself to both sides of the equation. Whereas joining a partnership that has an established track record alleviates some of the early pressures of fundraising from family offices, institutions, and high net worth individuals, especially when you're raising fund sizes that approach the 30, 40, $50 million range. Like that's a significant amount of money.
So how much did you guys invest first?
Last year, we probably deployed close to $10 million. Mm-hmm. And this year, as we raise the fund, time will tell, but we are also in the process of doing our first 2 deals. Right. So, and we're a very low volume shop. I think it's important for founders when they're pitching firms to really understand what the firm's strategy is. So we only make 10 to 12 pre-seed and seed investments a year. Because we're so hands-on, we don't have the ability to be investing in 25, 30 companies a year. And we have a very concentrated portfolio approach. That means that we are likely to put more money into businesses that we think highly of in like the Seed Plus, Series A, and maybe even the Series B if we have that capital available. But ideally, we're having a higher concentration portfolio than like other seed firms who, I think the strategy is just different, right? And the strategy is like invest in as many companies that fall within your thematic areas of interest as possible, whereas we take a different point of view.
Great. Can you share more? I mean, you mentioned that it's like, okay, you did the first round of investment around 10 million. Even that for a lot of, folks is, a large sum. Like, how did you go about, bringing together the people to execute that for, would say like Fund 1?
Listen, I think the hustle the similar to founders, like the hustle to be an emerging manager is like very similar, right? It's networking with high net worth individuals. It's finding pockets of communities that believe in you as a person and believe in the strategy, but more so like really just believe in you and your ability to access things that they don't think that they'd be able to access otherwise. So like how we did it is just, we like networked as much as we could on Zoom. And I tapped as much of my personal network as I could. A handful of our early investors in TVC and avid supporters also were like former primary supporters. And so I think it helps to have I think it helps to have like deep relationships across the board, because there are a lot of people who have the financial liquidity to invest in stuff like this, but they've maybe never been presented with the opportunity, right? And so we spend a lot of time talking about how do we improve wealth creation by making sure that like we believe we're building a big and successful thing. How do I make sure more diverse people are part of that equation, and it's not just like, a bunch of rich people in finance, right? Because I don't think that like truly moves the needle in the way that we want to long term.
Excellent. Can you share more about your team and how you built it?
Yes. So we have a 10-person team, which is very large for the size fund that we have, in large part because we have revenue that comes in through the other pieces of the business. And so the team was built with the mindset that we wanted to be investing in those sectors that I shared earlier, and basically wanted to make sure that we had the capability to do so. Right. And so we have someone on our team that has a deeply scientific background. And so he looks at a lot of the life sciences deals that we are assessing. We also have someone on our team that, spent the early parts of her career at jet.com and also then helped build the brand incubation team at Walmart. And so when we look at consumer businesses and we look at e-commerce, she's very much like the person that I go to that has that expertise. And then my partner Nick and I, we spent a lot of time in B2B and like across a lot of different sectors, in part because we used to either found or operate companies in those spaces. So we think we know enough to be dangerous, but then we also surround ourselves with plenty of advisors that make sure that they supplement the things that we don't know. And so the team is built very specifically to be able to assess early stage deals, support family offices, and build community around us that we think will be our long-term competitive advantage. And we think that we also will have the ability to expand the team as needed over the years. But the core TVC team that you see in front of you is, the foundation of the business today.
Amazing. 10 folks. That's a huge team. And can you share more around that strategy? Like where, like, of course, for a traditional fund, right, you usually don't get the returns until you exit. You may have management fees, right? And with the other areas of the business, like how does what are those other products and services? Like how are you structuring that so that you can take care of the team?
Well, so we're not heavily reliant on the fees of the fund in order to run our own operation. And so the size of the co-investment community can fluctuate, and the revenue that we generate there can also then fluctuate. The amount of family offices that we decide to work with early on, and the AUM that we manage on their behalf, that will fluctuate. And that will mean that we have basically revenue streams that most traditional venture businesses do not have. And so that gives us the ability to fund the core team and other operational expenses that at least we feel comfortable with today. And so listen, at the end of the day, if we end up successfully deploying fund one and then raising a second fund, like it's plausible that fund is bigger, and that gives us a little bit more to work with. But we're so early in the life cycle that I think we're trying to be conservative with the way that we resource, and we're trying to be thoughtful about making sure that the team that we have is motivated and paid competitively and incentivized in all the right ways, because at the end of the day, like we really need a high functioning small team in order to succeed.
Great. No, I appreciate you sharing that innovation, right? Like of getting these family offices, right? They're engaging you all, and they're able to participate side by side. So there's it creates consistency for you all to operate as you build out a larger fund. Um, it, can you share more about, you talk about community? It's definitely a theme, right? I think the community fund by Lolita Taub out of Flybridge Capital is one endeavor. You still have just over the last few days on another level of community. They talked about the crowdfunding movement. It was enacted such that startups can now crowdfund $5 million instead of the original 1 million, 1 million plus. You know, can you share what are some of the trends related to community that you think will impact venture like now and going forward?
Um, so I guess on the community side of things, like there's a lot of different ways to view that as an asset. So for us, we think about it as how do we, one, improve our ability to access diverse deal flow. And so the collective was built in part because we thought if we put diverse people in there, then that will drive diverse deal flow to us, right? And in this business at pre-seed and seed, you're often looking for people. You're not necessarily looking for like full on companies yet. And so having an extension of your team that gives you access to pools of networks that you wouldn't normally have, like I think that's important. For most venture funds, community is like a way to access deal flow, right? And for the thoughtful ones, they use it as an opportunity to diversify their deal flow and not be heavily reliant on the networks that I think we're all like privy to be if we're in this community already. The themes that I see on the, I guess, like on the company side of things is like when community starts to become identity, then I think that you know that you've built something very special, right? You know that like when people are willing to self-identify and talk about and advocate for what you're building, then there's something there that's like so much more special than like this arbitrary now overused word that has been like I think the replacement for like proprietary deal flow, right? Like there's kind of really no such thing as that. And so the venture ecosystem is trying to find ways to cultivate that. And I think I think All Raise does a great job in trying to, support those types of initiatives. I think that other funds that are building initiatives all also do great jobs around that. But I guess like what I don't want community to be is something that like gets like kind of overused over time. And we're very careful about the way that we fold it into our strategy because we think for us like it's a key differentiator and it's a key point of leverage. If we didn't believe that so strongly, like we probably wouldn't have called ourselves the venture collective. But we so far so good in terms of like the narrative and the execution behind it.
Amazing. What are the other components that you consider innovative? This co-investment approach, as of the collective, right? Like finding ventures. How are you all thinking of being different than other venture capital funds? How do you think of a competitive advantage for yourself?
I mean, those are the main things for us. I would say like we're very cognizant of making sure that our team is extremely diverse, that our cap table is extremely diverse, that when we bring people into the fold, that we are thinking about that, the diversity of the people that we surround ourselves with. And so like, I think at the end of the day, if you care about that, and so much research would suggest that like diverse teams outperform those that are not, like we believe that we will outperform because of the amount of thought and care that we've put into that, both in building our own team, but in the surrounding networks that we have around us. And like, we're only getting started. So much of this strategy is going to get refined. And frankly, like, I don't know if all of it's going to work, but I have a very strong belief that it will, because I think people have an appetite to invest in the things that they care about and to work with people that they like and that they enjoy spending time with and they believe to be mission and vision aligned. And I think I can find enough people who want to do that with us. And so, talk to me in a year and I'll let you know if we're successful.
No, that's great insight. What as we see like venture, like beyond just community, what other trends you see in venture capital that are pushing evolution? And the reason I say that, just give context, right? Like venture capital, the whole 2 and 20 model, right? 2% manager fees, 20% carry, like the typical structure, right, hasn't really changed all that much in the last few decades, right? So you see all these different models emerging, like X Factor Ventures and like you all. What are other trends that you see and in the venture capital space, and why do you think this is happening now?
I think it was only a matter of time, and last year was probably a catalyst for many, many decades of the lack of innovation and diversity within venture and the startup ecosystem. So I would say, I guess, a few things. The venture landscape, it can't innovate. It can only innovate so much as the LPs that invest in it. And so this will take time. And I guess over time, what you will see is that emerging fund managers, particularly those with underrepresented backgrounds, as they see more and more success, they will raise larger and larger funds. They will then compel the endowments and the pension funds and the other large institutions to start really looking long and hard about their strategies, because those funds, I believe, will outperform. And there's a lot of research that suggests that emerging fund managers actually tend to do better than those that are not, right? And maybe that strategy, I guess, conclusion is not across the board every time, but I do think that there's something to say for that. And so I look at innovation in the venture world as multidimensional. And so you have to give some capital to emerging managers today that come from underrepresented backgrounds. You have to increase that capital over time, and you have to shift the mindset of the LPs that are making those decisions and diverting trillions of dollars into the hands of more diverse people. And until you do that, you really won't see the kind of change that I think you and I want, and the kind of parity that we all aspire to have, because it just takes a long time. And we're talking about, at the end of the day, a business that is centered around making money, right? The last thing I would say around venture innovation is just the shift in mindset around impact investing, right? And charitable donations. And so I appreciate the amount of dollars that organizations are pledging to underrepresented groups, whether you're on the founder or the funder side. But I think what I would love going forward is to have that be not as part of a diversity initiative, but just as part of good business, right? This isn't a charity. Investing in me, it should be similarly assessed as investing as in the average profile of a VC. And I think that society takes a long time to change, and people don't like to be told that they're doing the wrong things. And so it takes small incremental changes. And my hope is, and my goal in the future is to be in a position where I can be that LP that helps divert capital to all the right places. But for right now, my passion lies in driving it into the hands of founders and being at that forefront of innovation. I don't feel quite enamored enough to start a company myself, but I am definitely happy to help as many founders as possible.
Excellent. If you can share with the audience, I know we're coming to time here. Can you share a little bit with them what's next for the Venture Collective?
Well, we're very busy. So what's next is a lot of the same as last year. So we're raising our first fund. We're thankfully in a position where we feel really good about the raise, having been in market for a short period of time. We're actively deploying capital into founders. So we will be investing alongside fundraising, which I'm very excited about because I don't want to be limited by the fact that we're also, parallel pathing our own fundraise. And I think we just want to prove out the couple things that we talked about today, right? That community is important, but not just community as like a word of the day, but like actually as like a core part of our strategy. We want to prove that we can support family offices in the way that I've articulated prior. And I want to see more diverse founders get funded. And so whether that's through the work that I actively do at TVC or, the organizations that I'm a part of or volunteer at, like that's kind of the name of the game for probably the next little while until the conversation isn't about just, I think until every founder just looks the same, right? And that there's no kind of difference between women founders or Black founders, and there's not so much focus around it. I think like once you see that start to become the case, then you'll know that we've made a substantial impact on this world.
Excellent. Thank you, Kat. So thank you for everyone watching. This was the next edition of RBL1 Live. So Kat Hernandez, general partner of the Venture Collective. So thanks for joining us tonight, and tune in next week. So thank you, Kat.